All right, good morning, everyone. Let's do a quick sound check in the free room and over on YouTube, and we'll get this party started. Today's my day off, so my only chance to hang out with you guys for today. What's up, Lorna? What's up, Mirza? Good morning, Andrew. Good morning, Craig. Good morning, Jim. All right, guys. A shortened week, of course. We had that 3-day weekend. So, quick look here at the futures. A little bit quiet. S&P's down about a quarter. NQ down about a third. And I mean, here's the thing, guys. There's not too much has changed. Everything looks pretty good here. We are extended, and based on most rules of thumb, we've been extended for quite a while. So keep in mind, extended can turn into more extended, can turn into even more extended. But at the same time, eventually, we are going to pull back to that 21 EMA. So my thinking is, I'm not trying to catch the top. I'm not trying to catch the flush. Bigger picture, if we jump over here to the weekly chart, and again, we're extended, so I think a bit of a flush here would be a great thing. Should serve as a pretty good buying opportunity. But bigger picture here, folks. We're only 3 weeks into that weekly squeeze firing to the upside. And you'll remember going back about a month ago, we were discussing the potential of that nested squeeze dynamic, where the S&Ps had a daily squeeze, we had a 2-day squeeze, a 3-day squeeze, and then, of course, the big boy here on the weekly chart. You've seen things, Netflix is pretty similar. A few of the semiconductors were similar. Tesla's even pretty similar. Tesla fired a daily squeeze, went on to fire a weekly squeeze. So point being, to me, these are the kinds of setups, 2, 3, 4 squeezes on top of each other at once, that can lead to some of the most powerful moves you'll get in the market. So with that being said here, being that we're only 3 weeks into that squeeze firing to the upside, I think we should have plenty more gas in the tank here. General rule of thumb, once a squeeze fires, we're looking for that 6 to 8 to 10 bars of momentum. So my thinking here is, if we get a flush, we get a little bit of consolidation, as long as the structure, as long as the momentum, frankly, as long as the indicators are still bullish, that flush, that consolidation, and ideally I think it comes in the form of a flush, but that should serve as a good buying opportunity. Where I think the next month or 2 months here, that weekly squeeze could take us to 4,500. So I think we got some more gas in the tank. And then a bit bigger picture. None of this really matters as far as what we're going to trade and focus on today. But since I got you guys, the monthly chart here is getting pretty interesting. So let me change the 200 to the 50. All right, so 50 period simple. All right, now, again, this doesn't matter today. Doesn't matter next week. Frankly, it might not matter at all. But what I like to do, right, take a bigger time frame like a monthly chart, which of course is going to be a little bit slower. But from a structure, from a trend, from a momentum, from a squeeze point of view, I want to look at that monthly chart the same way I would look at really any other time frame. So look at that monthly chart the same way you would look at a daily chart, a 15-minute, a 30-minute. So what's pretty interesting here is there are some similarities to that flush you had back here from COVID. Now, the thing about being a short-term trader, which I would imagine most of us here this morning were short-term traders, meaning we're living it, we're breathing it every day. Living it and breathing it every day. That COVID flush felt like the end of the world. In living it and breathing it every day, the flush here from the highs to the recent lows, right, feels like the end of the world. From a structure and a trend point of view, all that COVID flush really did, right? It didn't kill the it didn't kill the monthly uptrend. It didn't print a monthly sell signal. All we really got was a move down to the monthly 50. From there, we got a strong bounce. We did that in a brand new monthly squeeze. And then down here on the histogram, as soon as momentum crossed back above that zero line, that monthly squeeze had the slingshot effect. So the slingshot squeeze is when your squeeze prints. They rip the price lower, right? Kind of flirting with the idea of making that squeeze trigger short. And then they yank it right back in the range. Momentum gets back above that zero line. So it's kind of like pulling back on a slingshot. You pull it this direction. They can't quite get that squeeze to fire short. And then booyah. Right back into the range. You get a brand new buy signal. And all kinds of beautiful action from there. So if I look at this chart like I would look at a 5-minute, a 15-minute, or a 30-minute, this flush we just sat through, and for conversation's sake, let's pretend we're looking at a 1-hour time frame. So it's not a monthly chart, it's a 1-hour chart. That pullback didn't really kill the hourly trend. We didn't get sell signals, we didn't get negative crosses, we really just came down, gave that rising 50. All right, now that rising moving average alone is a sign of an uptrend. If the 21 EMA and the 50 SMA are trading lower, well, that's a sign of a downtrend. You pulled back to your rising 50, gave it a little smooch, right, a little kiss on the cheek, and now inside this big monthly squeeze here, I do think very similar to back here in COVID, this monthly squeeze could potentially have the same slingshot effect as a monthly squeeze from back there. Trend never broke. We never broke under the 50. They begin to rebuild. All right, rebuild looks like your weekly chart getting a buy signal, your daily chart getting a buy signal. And again, if I'm looking at this like a 1-hour chart, inside that squeeze, above that 21 EMA, with buy signals on lower time frames, so the weekly chart, the 3-day chart, the 2-day, the daily, that all kind of has me thinking this squeeze here wants to fire to the upside. If it was a 5-minute time frame, a 15-minute, a 30-minute, a 1-hour, until proven wrong, that's kind of the pattern I'm looking for here. Pull back to the 50, slingshot it back into the range. From there, that squeeze hooks, fires to the upside. Pull back to the 50, smooch, slingshot. And I think from here, things could get pretty interesting. Now, that might never happen. So maybe next week the market's falling apart and that's all she wrote. If it does happen, it might take 4, 5, 6+ months. So again, as far as our trading today, as far as our focus for, next week, the following week, this isn't all that important. But I think, since we're here together at least a couple of times per week, I think we might want to get in the habit here of coming back every week, updating on this monthly chart. Now, what I can tell you guys is, as far as my indicator, the big 3 signals, there's 2 parts to the equation. There's the momentum part of the equation, and there's the structure part of the equation. So the momentum criteria comes together and the structure criteria comes together. That's what produces a buy signal. So as far as the monthly chart here, we have the structure part of the equation. The only thing keeping us from getting an official monthly buy signal, right, just like we got back here, is momentum. We got the structure, we got the squeeze. We need a little bit of gas in that tank now. So what I'm going to watch here over the next handful of weeks is the histogram down here. Now we're under the zero line, right? So momentum isn't bullish, but you are starting to get that turn. So week after week, month after month here, momentum continues to rise. Well, the structure is already there. In the event this crosses back above that zero line, we will again get a monthly buy signal. If we do get to that point, like a 5-minute, like a 15-minute, like a 2-hour time frame, a squeeze plus a buy signal, it's my favorite thing in the world. And the only thing I can see that doing is firing to the upside. So we'll keep on coming back to that. Again, bigger picture, but a little bit of food for thought. If it was a 15-minute chart, I'm thinking, man, they might try to slingshot this for a move at least back to the highs here. So a little bit of bigger picture for you. But then again, guys, like short term here, I'm not saying we're going to get a pullback, nor am I looking to get aggressively short for a pullback. But I think a decent flush here in some of these leaders would be a beautiful thing. Like Apple, for example. Apple's pretty cool up here at 185. But I tell you what, man, it's a little bit cooler after that dip to that 21 EMA. So I'm not looking for Apple to fall apart. Not looking for a huge reversal in the Apple trend. If anything, guys, going back here to the monthly chart, everything we just discussed about the S&Ps, the monthly squeeze, the slingshot, etc., if that's all going to unfold, anywhere near the way we just discussed, I think a huge part of that is the monthly squeeze here in Apple. And again, look at it like you would look at a different time frame. The only thing about a monthly chart is they're a little bit slow. But the structure, the signals, the squeeze, all the same rules typically apply, whether you're looking at a 1-minute chart or a monthly chart. So being that Apple is the biggest of the bunch here, if anything is going to propel the market back towards the previous all-time highs, I think it's going to be this bad boy right here. All right, you got the biggest name in the market. And, frankly, guys, nothing happened here. You live it, you breathe it, you show up every day, Monday through Friday. Yeah, you're feeling all of that. All right, that $60 pullback, 185 to 120. Yeah, you feel all of that. But you take a 40,000 foot view of the thing, all right, just kind of take a step back and see it for what it is. Nothing happened here. No sell signals, no trend reversal. You never would have thought there was a bear market in Apple. Ironically, COVID didn't really do jack shit here to the structure either. Right? Here's a disaster of COVID. Did Apple get a monthly sell signal? No. Did Apple, totally reverse the trend? No. What Apple did was print a brand new monthly squeeze, fire to the upside, and from there you got a huge push. So this all looks poised to potentially do the same thing. Maybe not in a straight shot. Ideally after a decent pullback. But if that monthly squeeze here can fire long, I think that does the S&Ps a whole lot of good. As far as potentially getting this thing to go down the same path. So again, bigger picture, but short term, I would love to buy a pullback in Apple. I would love to buy a pullback to the 21 EMA in a name like Netflix. You look at Netflix here, it's made a big move, but that weekly squeeze could have a little bit more gas in the tank here. Tesla. Tesla's been a total nut job. So that's a good $50 above that 21 EMA. But I tell you what, you give me a good pullback here in Tesla, I want to jump all over that because you have this monthly squeeze. Hold on, guys. I got some noise coming in here. There we go. Sorry about that. But right, Tesla. Yeah, it's extended. Yeah, any given morning, you could see a 5, 10, 15, 20, $30 pullback. But your weekly squeeze is only 2 weeks into firing to the upside. Give me a good pullback. I'm probably going to be a buyer, thinking that weekly squeeze gives you a little bit more. So the Teslas, the Netflixes, the Nvidias. Nvidia's another cycle right now. I would welcome a pullback in all of them. So just be patient. Make sure you're picking your spots wisely. And most importantly, don't trade something like a Tesla all the way up here in a fashion where if the following day this thing finally starts coming back down to earth, like you don't want that move lower to hand you all kinds of crazy damage. As strong as it is, as bullish as it is, we are pretty extended. So you buy those calls up here at 275, even a dip to 250 could be a little bit of a stinger. So pick your spots wisely. But for those of you in the options room and the mastery, we got a couple trades on heading into today. So take a look at a few of these bad boys. So yesterday we picked up some calls on Mara. This thing's pretty explosive. So I think we bought our calls when the thing was going for like 10.50-ish. Caught another buck into the close. So let's see. We're going to open around $12 and change. So a little bit of continuation here into today. But there's the classic setup. Daily squeeze. All kinds of buy signals. And like the S&Ps a few weeks ago, like Netflix about a month ago, you have that nested squeeze dynamic. You got squeezes and buy signals on the 3-day, the 2-day, and the daily. Now, I'm not going to plan on holding this thing for a long time. If anything, today we get a nice rip through $12. Probably just cash it in and move on to the next one. But as far as these squeezes go, that's a combo that can lead to a really big daily squeeze fires long. That might go on to wake up the 2-day squeeze. 2-day squeeze fires long. You might go on and wake up the 3-day squeeze. So that is essentially Netflix a month and change ago. Right around that 330, 340. Daily squeeze fired long. That triggered the 2-day. That triggered the 3-day. And then eventually the weekly. So we got some calls here on Mara. And then we still got some calls here on Zoom. And Zoom is just one of these names where it ain't breaking any records, but it's also not breaking any rules here. So a little bit of a patience game here on the Zoomster. But all in all, a good setup. Got a good hefty handful of buy signals. We have a bull squeeze on the daily chart and bull squeezes on that 2-hour, 1 hour, and the 30-minute. So with a little bit of patience here, guys, it's a good setup for a push towards that daily 200, which is the target on the trade. 70 to 50, $73. That ought to do the trick. So we're long Zoom. We are long MARA. Yesterday we took profits on a short in Solar Edge. And based on the nature of the market, we haven't spent too much time as of late talking about shorts. But the short side, the short setups, just flip the bullish trades upside down. So if we put a minus symbol here in front of Solar Edge, that'll show you the inverse chart. And if you're familiar with my trading, the inverse chart here of Solar Edge should look pretty familiar. All right, there's my favorite trade in the world. Bunch of buy signals telling me we should go higher. I got a weekly bull squeeze. I got a 3-day. I got a 2-day. I got a daily. Like, that's my favorite. Get long here, catch the push, cash out, and you move on to the next one. So when you're trying to short something, in my opinion, opposite. A daily squeeze under the 21, whole bunch of sell signals. It's usually good for a nice flush lower. So we cashed out in solar edge yesterday morning, and then we took some of those profits and opened up a short here in FSLR. We're out for blood right now with the solar stocks. But check out FSLR here. If I show you the inverse chart, they all look pretty familiar. Daily squeeze, buy signals, 4-hour squeeze. That should bode well for a nice pop higher. So for the short trade, just the opposite. Daily squeeze under the 21. Bunch of sell signals telling you path of least resistance is lower. Nested inside of that daily squeeze is a 4-hour squeeze. That all comes together, you're looking for a decent flush. So I do like FSLR for a short. And a lot of the things that are popping up on my short scans, it's energy, it's solar stocks, it's oil kind of stuff. Like another one was Oxy. And we didn't trade Oxy. But this kind of fits the bill as well. The inverse chart of Oxy, that makes for a really good bullish trade. You got a weekly squeeze, you got a 2-day, you got a daily, you got a bunch of buy signals. You buy it here. Looking for a pump. So same thing, just flip it upside down on the short side. Got our daily squeeze. We're under the mean. Whole bunch of sell signals. And then a couple nested squeezes as well. So Oxy looking like a good short, but that is our book of trades for now. Long Mara, long Zoom, short FSLR. But all right, guys, listen, I got to let you go here. I got a buddy coming over in a few minutes helping me out with a computer. So I hate to say it, but the time has finally come. The computer that I'm using right now, I want to say is 12 plus years old. And this thing's been a total workhorse. But I think it was Thursday or Friday of last week. Was doing a session in the mastery, and she just kind of crapped the bed on me. So time for an upgrade. But let me check the schedule, guys. I don't think I'm back in here today. They gave me today off, so we'll see what kind of trouble I can get into. Yep, that's it. So listen, guys, I am out of here for now, but I am going to put a video on my YouTube channel later tonight. So for those of y'all watching on YouTube, you already know where to go. But I am going to put out a video tonight talking about the small account I've been trading. And I'll give you guys a quick peek at that here before we call it a morning. But let me just grab my YouTube channel for the rest of you. Alrighty. Taylor's YouTube. All right, so later tonight I'm gonna put out a video talking about the small account that I've been trading here. And let's see. So, all right, so I started the small account on the 17th of May. So we're a little bit over that 1 month mark now. I started the account with 2,500. We have about 19,000 of profits, and I've paid myself about $5,000. So had I not wired out the 5K, we're looking at 2,500 to about 20,000 and change. So what I want to do in tonight's video is just kind of show you guys, and for full transparency, this is aggressive trading. Like today, for example, I've got a $15,000 starting balance. I have $6,000 of buying power. What does that mean? It means more than half of this entire account is wrapped up in some trades right now. So there is that potential. I wake up this morning, every one of my trades goes to shit. I might lose half the account. Now, that's of course not the goal, but more importantly, what I'm trying to show you guys is, put aside the size of the growth. What I'm trying to drive home is I've done all this growth here with a win rate that really is nothing to write home about. And I'm going to figure out the exact number today. My win rate might be like 40%. Meaning most trades I'm taking are not working. But I'm moving the ball forward aggressively. And the reason being is just risk management. All right, I'm being pretty aggressive with my position sizing. I'm being even more aggressive with the risk management. Like it's truly just a zero tolerance policy for any kind of BS. So it's a combination of, take something like MARA. When you're trying to grow a small account, or just frankly, you're trying to grow an account of any size, one thing you want to aim for is on your winning trades. You want to get a good bang for your buck. All right, a 15, 20, 25% return, that's good, right? That's cute. But I think a huge focus should be you only want to trade these setups that have that kind of potential for a 50, 100, 150% return, right? In other words, when the trade works, you're really catching something sweet. So every single trade that I've done on this account, with the exception of like 2 or 3 iron condors, has been the big 3 squeeze. Because to me, there's nothing better. Like my squeeze happens, my signals are printing, like everything's coming together for that big explosive move. So it's a combination of that. I'm trading setups that have a lot of potential. But then more importantly, way, way, way more importantly, I'm being ruthless as far as the risk management. Like one good example would be JP Morgan. We bought JP Morgan, I think, somewhere back here. A couple days later, it pulled back a little bit. We lost some of our buy signals. We got a couple sell signals. I took the trade off at like break even. I don't care how much time till expiration. I don't care if I got credit spreads. I'm only trying to have my cash to work during that high probability moment in time. Like where everything is just truly firing on all cylinders. And to the extent that changes, no questions asked, just take the trade off. And that was a huge struggle of mine early on in my trading. I mean, I think for a lot of people, the realization of the loss emotionally can be a difficult thing. So we'll take a good trade. We'll have our triggers for the trade. But then as soon as things kind of turn south on you, you start the justification process. All right, well, the trade ain't working. All my buy signals disappeared. I should probably no longer be in this trade, but I've got 3 weeks till expiration. But I've got a put credit spread. I only need it above 138. I think you want to avoid, to the best of your abilities, playing that game. So one thing I've been doing as of late, every single trade I take, I have to screenshot it. In screenshotting it, at least for me, it just makes the whole process so much easier. Like if I start doing that justification BS, I can call myself out on it really quickly. All right, why did I take the MARA trade? All right, here's my reasons. Got a daily squeeze above that 21, whole bunch of buy signals. My goal is to pull the trigger on nothing but that kind of a setup, because to me, that's the kind of setup where you take your entry. If not the same day, then the following day, you should be sitting in a profit. I've got zero interest in let's get long. Let's give the trade 60 days till expiration, and we'll let it do its thing. Especially with this account, right? If I'm taking a 10% position size, I've got no room for shenanigans. So as soon as this picture even remotely changes, I'm taking that trade off. I don't got to find out if we can hold support at the 50. Right? I don't got to see if we can hold recent support. This should explode, and it should explode pretty much immediately. Any kind of noise, any kind of funny business, I'm taking that trade off. So again, I'll talk more about that in tonight's video. But the combination of those two things primarily, that squeeze first focus, that does put you in front of the kind of setups where when they work, man, these things give you some beautiful stuff. But then just being ruthless as far as cutting them off if they're not doing exactly what they should do. Now, I think you can do that with any account size. I think you can do that with any level of position sizing. You might not have to be as aggressive as I've been in this small account, but point being, a lot of my trading in the past was very reliant on a good win rate. All right, the relationship between my losing trades and my winning trades kind of backed me into a corner where if I'm not cranking out a 70, 75, 80% win rate, I'm not making any money. Now you put a gun to my head, I still believe you can work a 60, 70% win rate with these kinds of setups. The key that I'm learning more and more is manage them in a fashion where you can make money with a 30, 40% win rate. So subscribe to the channel if you don't already, and I will have that video posted later tonight. But all right, my friends, I got to let you go here. As always, I appreciate your time. I apologize for not getting to all the questions. But I will be back with you Monday morning. Friday morning, I'm waking up early and heading to Chicago. So if you're in Chicago, keep an eye out for your boy. But all right, guys, have a great day. I appreciate you, and I'll talk to you soon. Adios.